Hey traders, welcome to Charts and Coffee, July 4th edition. I'm up looking at charts. I figure a lot of you might have a few quiet moments in the morning, day off. Markets are closed before the explosions start tonight. For those of you that have animals, have pets, I know the CBD has helped a lot for my pup, who at this point I think has PTSD from between the thunderstorms here in South Florida and the early 4th of July celebrations. But nonetheless, I hope you're having a great day off and spend some time out in the sun. In the meanwhile, let's kick our morning off with a little bit of charts and taking a look at the week. I'm going to be putting the finishing touches on this week in the markets. We've got three big themes. I'm going to share them with you here this morning. Three big themes. Now, once you have a narrative, by the way, if you're wondering, okay, Rog, when you're setting up your week, where do you start? I start with stories, right? I mean, it does work. There is sort of a trade story to everything we do, right? And so if I can find the story, then I know what people are thinking: bullish, bearish, panic, fear, etc. And then we can start to get down to the index, the sector, and the individual stock. But stories are usually, whether we know it or not, the reason something's moving. And then, of course, we want to prove, confirm, and manage risk in that story with price. All right. So one thing that's been really interesting, one thing that's on my mind is Powell kind of dropped this notion of another hike. So we'll get the July hike and then one more possibly after that. And that was something that a lot of folks took, quite frankly, to the bank, right? This is going to be a much more hawkish Federal Reserve. You know what is not believing Powell? Fed fund futures and the long bond, and as well as the US dollar. So there's three things kind of calling a little bit of a liar, liar, pants on fire on Powell. So we can measure these things. So I'm going to get into how much is the market measuring, weighting, actually considering this two hikes scenario, because he said a lot of things over the past few months. And the truth of the matter is, front running what he's going to do is not how trading is done. Well, reacting to the adjustments are where, and that's a huge difference, gang. You know, for those of you that understood what I just said, you'll say, of course, Rog, it's not about trying to front run Powell and outsmart the Federal Reserve and say, see, this is what I knew they were going to do all along. We'll get a lot of that on TV. And doing that kind of prognosticating, that's their job. That's how they get on camera, right? The rest of us have to put on trades. And trading really is reacting to what we think is going to happen and what we really got, say a data release or earnings season, or adjusting to the market continuing to fine tune expectations about monetary policy, about the economy, whatever it is, right? It's those adjustments, those slight adjustments. That's where the trades are found, right? Not prognosticating well ahead of time about the overall movement of where a market could be going. Okay, so then what we have next in terms of a narrative is, did we see rotation last quarter? And does it matter? And the truth of the matter is, no, I don't think we saw a lot of rotation. There was two rotation scenarios that we played out in the previous issue of This Week in the Market. And there were two groups. One was much more defensive. One was more of a participation type rotation. And I would really not call what happened rotation as much as I would call it broader participation. I am not a fan of breadth, market breadth. I'm going to burst some bubbles right now. It doesn't matter. And you might say, whoa, Rog, you know, I follow these indicators that look at market breadth. Do me a favor, rather than me telling you all the reasons why it doesn't matter, do me a favor. If it even intrigues you, head on over to whatever your favorite, Yahoo Finance, ETF, DB, and look at the composition of the indices. What do I mean by that? How are the stocks weighted and how are the sectors weighted? And the first thing you'll notice with the Dow, the S&P, and the NASDAQ is that a very few number of stocks and a very few number of sectors have a disproportionate weighting on what that index is going to do. So, for example, tech is number one in NAS, tech is number one in the S&P, and financials are number one in the Dow. it doesn't matter that all stocks are participating. What matters is which ones are. So market breadth, while nice, broader participation, while certainly good to note because it'll broaden the watch list of what we could trade, is absolutely, positively unnecessary. Listen to me now, believe me later. Okay. The only people pushing market breadth are people who've created an indicator about market breadth or who are on television. And this kind of technobabble has traction, right? So please be aware that breadth is not necessary. Hence, the Nasdaq's been able to outpace the S&P and the Dow, and the S&P has been able to outpace the Dow. Why? Because tech has led it, right? Tech has led it. So there's that. And the last thing is earnings season. I'm going to walk into how I prepare for earnings season. So you notice I've had these two calendars on the screen. The two calendars, well, actually not just one right now. I'm going to show you another calendar. One is, what are the data releases we have coming up? When we get back into our beginning of the week and our beginning of the quarter and our beginning of the month, we have OPEC meetings, the FOMC meeting minutes. FOMC member Williams is going to speak a couple hours after the meeting minutes are released, no doubt to do a little cleanup. But after the market is closed, that's going to be quirky as all get out. ADP, it gets pushed to Thursday from Wednesday because of the Monday bank holiday. ISM job openings, that's a big one. ISM and job openings. We got the ISM services. We had manufacturing on Monday. We got the JOLTS job openings. Crude oil inventories also get pushed to Thursday. And then, bam, we've got the non-farm payroll. There is a lot this week that will come out to sort of shed light on the first topic of our This Week in the Markets newsletter, which is how come the two hikes haven't gained that much traction? How come we're not seeing more expectation for two hikes in the Fed fund futures? In other words, why have a broad group of traders, Fed fund futures and bond traders, pretty much blown off this possibility? So this week's data could probably put all that into a little bit more alignment. And that's what we're going to be looking at. And by understanding those three stories, I've got a much better understanding of where the indices are going to go, where their sectors are going to go, and which stocks to keep an eye on, right? So that's just a quick breakdown here of what I'm working on for this Tuesday as we go into this very quirky, shortened week. So yes, happy 4th, everybody. And if you want to take a glimpse of some of that, two ways you can do it. Number one, all my Sector Secrets Mastery folks get the This Week in the Markets newsletter along with their membership. It's included. And then if you're interested in checking it out, head over to thisweekinthemarkets.com and you can check out a trial for $7. Okay. All right, gang. So let's get to it. As always, phone lines are open for your requests. If you have any symbols, time frames are helpful, directions helpful, as much information as you want to give me about the question, great. Let's jump into what we've got going on here this morning. And again, keep those symbols coming. We're going to kick it off with a quick look at what's going on with the S&P. So as you take a look at this particular chart here, what happened yesterday? Next to nothing, right? When we look at Monday's session, sort of this obligatory session to make sure the markets aren't closed for 2 weekdays in a row, 2 business days, if you will. And we just clung to Friday's highs. So we didn't really make significant highs. We did not exceed the highs of Friday, but we clung to that range of highs, or more importantly, we remained above the line in the sand, which is that cash close. So not a whole bunch of profit taking or buyer's remorse on this very truncated Monday session. Ditto the NAS. And then let's take a look at the Dow, because the Dow wasn't necessarily as optimistic. Why is that? What is the Dow being weighted by? If the S&P is able to hang on to strength, it's mostly because of tech, but secondarily because of financials. And financials had a really good showing, gang. We have now seen 2 sessions where a very important sector within the S&P has moved higher. So you have 3 cylinders in the S&P. We have tech, we have financials, and we have healthcare. And the weighting matters because it's the same 3 sectors in the Dow, only it's financials, then tech, and then healthcare. And healthcare continues to be what is dragging the Dow. Why isn't the Dow as strong as the NAS? Because of healthcare. Why is not the S&P quite keeping up, right? It's doing a pretty good job. Well, it's only been recently that the financials have begun to strengthen. So as long as financials strengthen, the Dow should be able to remain fairly supported, but keep an eye on this thing, right? This could affect not only the Dow, but the S&P as well. This is of the major sectors. This is the one that continues to be the most problem, lead to the most problems. Problems meaning that participation of all three of the major indices, NASDAQ, S&P, and Dow, moving together. And the more that you understand that connective thread, gang, from index to sector to stock, the better your watch list will be built. The more you're going to have more of the market sentiment and momentum and ultimately trend going in your favor, right? So this is the way we want to think about very much a top-down approach that I've been teaching you all for many, many, many years, index, sector, stock. And I do want to remind everybody that is an unusual way to look at the market. So if you're thinking, well, Rog, why would I do that? Why not just throw turn on a scanner and get the symbols that are, aligning with a similar technical readout? That's fine too, right? But that's not the way the markets move. The way the markets move is the indices move a certain way because the sectors within it, and those sectors move a certain way because of the stocks within it, right? And all that is rooted in a concept that I'll tell you what right now, gang, not 2 in 10 traders understand or even use, and that's high concentration weighting, right? Which is why a lot of traders are still using things like market breadth and a lot of the market internals that are not weighted in that way, right? So the information is not wrong per se, but it's weighted in a way that's not reflecting reality. Yeah. And that's a super controversial thing. I think the only more controversial thing that I tend to bring up when it comes to understanding why the markets do what they do is don't draw trend lines, right? We have 2 things. I don't use market internals because they're not weighted like the reality of the indices are. And friends don't let friends draw trend lines. All right. So taking a look at the NASDAQ here, continues to be the strongest. Why? Because when you lift the hood, the 3 heavy weighted sectors within it are all strong. What's really interesting is the laggard of the 3, XLY, is coming on really strong. And I know a lot of Tesla fans are out there. Why is XLY moving the way it is? Take one glimpse at Tesla. We have quite a few traders in the mastery and even in the futures room where I spend the most time. The mastery is where I spend the most time. They really love Tesla. It can be a little pricey to trade, but it's a great mover. And once it started trending, I want to show you all something. Keep an eye. We'll do that. Let's do this here. This is probably the most important indicator on my screen. And there's these 2 rows of colors, right? So each little block represents the momentum, top row, trend, bottom row of Tesla every single session, right? Okay, take a peek. Let's go to the beginning of the year, right? Okay, so let's do this. And if you're wondering, yeah, Rog, how would that help me get bullish Tesla or not? Okay. In this red environment, be cautious, right? Be cautious, maybe even take advantage of little movements to the downside. If you're a buyer, steer clear of it until we start moving higher. By January 23 of this year, we started at least going neutral. By February 7, 8 of this year, it became a little easier to buy dips or buy support. None of this means we buy at higher highs, gang. I never do that. And I don't say never often. I never do that. So it's not as if once it's green, just willy-nilly, arbitrarily buy wherever you'd like. No, it simply means buy the dip. Buying into support simply going to have a little bit better follow through. Okay. So moving on then to another, and by the way, I want to show you all one other thing. Notice how, we're getting little moments of moving higher, right? Oversold buy, nice, but we're below the 200. Look at the difference in Tesla once price on May 30 was able to get above that 200 propulsion. That white white series of dots you'll see on all my time frames, 5 minute, 1 hour, this daily here. Those white series of dots take advantage of a fast and a slow exponential moving average, right? So, by the way, gang, if you have questions, feel free to ask. On 4th of July, markets are closed. Try to break things down to my charts in a way that when we meet again tomorrow, when the markets are open, you think, oh, I've got a better idea of what Raghee's doing. I get what those 2 rows of colors mean. I get what the series of white dots mean. Notice how different Tesla started behaving after May 30. we got above the 200, gang. That's a significant move. In fact, we call that thing the equator. We got into the bullish hemisphere, if you will, at this point. Look at the nature of Tesla at that point. Green grab candles, higher highs, much better launching off every touch of the gray zone, of the volatility zone of the daily price movement range. Do you see that? Completely different stock. And how do we know it? How clearly do we know that? The transition from yellow to green is nice. That happened basically June 2. And the transition on May 30. In just a handful of trading days, Tesla became a completely different stock in terms of its underlying market trend, right? And then after that, you buy the dips. It's just that simple. You don't pick a top in Tesla. You don't talk about this is the high. It's gone too far. It's over accelerated. Nope, that goes out the window. It's a completely different stock. And then if you understand what Tesla does to XLY and how it even is going to benefit in some ways, little tail wags a dog on Amazon, now you realize, oh, okay, NASDAQ's really firing on all three cylinders now. Even the laggy cylinder of consumer discretionary, the third weighted after communications, after tech, is on track. That bodes very well for the NASDAQ, but it bodes even more positively for the individual stocks, right, that are in line with that sector. Yeah? Okay, cool. And once you understand again, all of this, the glue, if you will, is the high concentration weighting, right? If you're curious, okay, Rog, why do you call your mastery sector secrets? Because the secret is these weightings of the sector. The sectors are interesting. They're juxtaposed. They're larger than the individual stocks, but they're smaller than the index. Right in the middle, you've got why a lot of these things are moving. So once you understand the sector behavior, you understand the stock behavior. Once you understand the sector behavior, you understand the index behavior. So it's an interesting place to start, right? Kind of in the middle there. All right. So moving on. Okay, so that's kind of what we're dealing with this week. You got a good glimpse of what's going to be in this week in the markets, which again, you can check out. If you're like, yeah, Ron, I'd like to check out the issue. $7 for the month this week in the markets.com. All right, we got a question here on crude oil. Yeah, let's move on to crude. Took a really good look at the indices. All right, what's up with crude? Why isn't it moving? What's holding it up? Two things. Magnitude. The Dow and crude should ideally move together. And then let's throw the sector in there. XLE. So keep an eye on XLE. Keep an eye on the Dow. And then you might say, well, what does that have to do with crude oil? Crude oil could benefit from risk appetite, especially in those two sectors. But really, crude oil is the larger factor. So when I think about the connective thread of crude, it's the crude's at the top. I'll follow that up with the Dow and the XLE. And at the very bottom, individual stock-wise, we would look at Exxon, we would look at Chevron. Those are the top two weighted sectors in XLE. Why isn't crude moving higher if there's risk appetite? It's not risk appetite in the Dow, right? There's risk appetite in financials, there's risk appetite in tech, communications, consumer discretionary, right? But not in energy. That still tells us that there's a lot of hesitation about true economic optimism. And it just reminds us that OPEC curtailing production, while it can help put a floor in what was a downtrend or a weak commodity, in this case, crude, RBOB, gasoline, heating oil, while a restriction of production, a restriction of supply, right, can help put in a floor, it's very rare unless it's a geopolitical upheaval, right, or some sort of significant issue with exporting crude or exporting the underlying commodity and some kind of disruption in the distribution. For the most part, producing less crude is not going to manifest into an uptrend. It's just not going to work. What the best uptrends are built upon is price action above the 200, right? We've talked about that, and demand, right? That's the problem. If there's no demand, it's very difficult to have a legitimate uptrend, right? You can, again, keep supply low. You can disrupt supply in many different ways, whether that's on purpose, the way the central bank of crude, OPEC, is. By the way, the meeting is Wednesday. OPEC meetings are on Wednesday. So that might continue to put a floor on crude. And you'll see we just keep bouncing off the gray zone, but we're stuck in a range, right? Because there's no demand, right? There's no demand. No increase in demand. And by the way, this same story is in natural gas, right? In natural gas, it's a similar story. There's too much supply. In this case, there's basically too much supply. Um, natty demand is exceeded by how much is being produced. Why would it go up, right? At the end of the day, the things that we learned that were very basic, supply, demand, economics 101, they work. Now, let's take the word supply and demand, just break it down into what it means for us traders, right? Supply, what is supply? It's resistance. It's sellers, right? What's demand? Demand is support. It's buyers. It's all the same thing. Choose whatever lingo you'd like. It's all the same thing. How do we determine that is what differentiates. There's no such thing as a level where we're going to go back and say, well, this is where the supply is and this is where the demand is. No, this is where the sellers are. This is where the buyers are. It could be based on volume. It could be based on previous highs and lows. It could be based even on volatility. But there is no way to say, well, this is where everyone's waiting to buy or sell solely on price, right? That's tricky. Highs and lows are helpful, but the real determination is volume. So if you're asking yourself, okay, Rog, where is that volume story on this chart, right? If I'm looking at supply, I'm looking at resistance. You know what's interesting? It's smack dab in the middle of where we kind of are. It's right in the middle. See that? It's about $71.50, $71.67. That is your point of control. That's where the most amount of trading of crude has occurred, right there. So there's your sort of tripwire, being above or being below that. And then outside of that, you got your volatility levels, but this whole area that take a look how long this entire year we've been in this area. And I'm going to show you here so if the price isn't overlapping this is volume profile, gang. And this is really easy to do on TradingView. This shows you from here, from about $80.50 to about $69. 80.5 to 69. Notice that's where the bulk of the back and forth has been. Look how much volume we've got there. That whole level, because we just keep going back and forth over it, is loaded with volume. No one's got an edge here, gang. This is why crude's so frustrating. It's not as if we have a distinct level of volume at resistance and a distinct level of volume at support. So for now, we'll just keep an eye on the point of control and see if price can gain some traction above it first, and then whether or not it can gain some traction above the 200. So this is really difficult, right, from a trading perspective, which is all that I'm looking at. You know, we can talk about ramifications in many, many other places, but from a trading perspective, this makes crude difficult to trade. All right. And it makes it very difficult for the XLE or the XOP or the OIH, Exxon, Chevron, Schlumberger, Halliburton, etc. It makes it really difficult for those names to continue higher. Right. And that's the way it's moving. Right. So if you're wondering, okay, Rog, buy in the vicinity of about, look, I think the buy is in the vicinity of about 68 to 64, 63.50. Yeah, that's been a zone pretty consistently for support. It's a wide zone though. So what's the next thing I'm going to do to try to find a little bit more accuracy in the entry? Proximity to the gray zone, proximity to that daily price movement range. Look how well that when we get down there or even touch it, not too long after we're moving higher. But again, this is a very tricky looking chart. I think there's a lot of better looking charts out there. And by that, I mean trending charts, right? I don't have to trade crude. And frankly, I don't have to trade XLE, right? What I can look at other markets that are giving me better signals. And I think that's a really tough, sometimes we just want to trade crude, right? And I get that too. We have symbols we want to trade. I would say it's definitely a day trading symbol. I believe the day trading's been pretty darn good on crude. It's been moving, right? That choppy volatility in a 5-minute chart does equate to a lot of movement. So that's the way that I look at that. Yeah, that's the way I look at that. All right. So what's going on with the US dollar? Now, to look at the US dollar, yeah, you can look at the DXY. We'll look at the DXY here really quickly. And then I think the best place to look would be the 6E euro, right? The dollar's moving back down again. And that's one of those corners of the market that I mentioned that are not really believing that Powell is all that more hawkish. Remember that a hawkish central bank, one favoring higher rates, is typically going to have a stronger currency than one that's at the tail end of their rate hikes. The dollar's not strong. It's not above the 200, those dots, right? The equator. And I would be bearish. In fact, we've talked about this for the better part of probably 8 or 10 months, favoring the short side of the dollar whenever the euro, right? Whenever the euro is in a buy situation. Now, why do I prefer the euro over the dollar index? One, it's a little bit more accessible, right? DX futures for futures traders, need the ICE, which is not an exchange that normally comes with your platform. You've got to pay a fairly exorbitant amount of money for access to real-time data of that exchange. And then the other thing is the 6E is a really pure look at the highest concentration weighted currency in the dollar. Okay, Rog, wait a minute. We talked about high concentration weighting for the indices. You mean the dollar's that way too? Remember, gang, there's no such thing as trading just the dollar. Even DXY, UUP, there's no such thing as trading just the dollar. Any symbol that says US dollar, whatever, index, futures contract, whatever, is actually a basket of currencies being traded against the US dollar. The number one weighted currency is the euro, always, right? By the way, the euro US is the largest traded symbol of any kind on the planet by a landslide, right? The euro US and the foreign exchange. The euro is 58% of the weighting of the basket. So let's use a little bit more of, say, the parlance of the NASDAQ and say Apple. Apple and Microsoft are your number 1 and 2 or 2 and 1. They go back and forth. Weighted stock in the NASDAQ. Apple's just more important than the other 99 stocks in the NASDAQ 100, right? So when I take a look at the euro futures or the euro 6E futures or even the FXE ETF, this is the euro versus the US dollar. This is 58% of the US dollar basket. So for the most part, where the euro goes, the dollar is going to move inverse to it. Where the dollar goes, the euro is going to move inverse. It's a negative correlation. And it's the strongest, I think, easiest way to understand what's happening with the dollar. So you'll notice I'll just gravitate right on over to the 6E. These are things you pick up after 2 decades of foreign exchange trading, right? Most folks are looking at the dollar as if you're trading the dollar. You're not, right? We're not. We're trading mostly euro and then a fairy dusting of yen and pound and Swedish krona and Aussie dollar, fairy dusting of all these other currencies. The top 3 weighted currencies, by the way, if you want to pay attention to them, and in this order, euro by a landslide, distant second is the yen and then the pound, right? And then everything else is just the remainder of the currencies in that basket, fairy dusting, right? And it's a quirky list. It really is after you get past the pound. So I would be bearish. I would absolutely be bearish the dollar. Yeah, and I know there's a dollar question here somewhere. There we go. I would absolutely be bearish the dollar, right? And 2 reasons. Macroeconomically, the European Central Bank, will hear from Lagarde on Friday around lunchtime, 12:45, by the way. The funny thing is, when we look at the Lagarde event, remember, that's a dollar event. Okay, that's the dollar event. All right, Mark, I know speak about sometimes instead of buying the index. Oh, a proxy. Okay, Mark. So instead of buying the index, I'll buy a relative outperformer. Am I buying the stock itself or am I buying the, there we go. Am I buying the stock itself or am I buying the index? It depends on the relative outperformance. Sometimes the individual stock can be a relative outperformer versus the index, right? NASDAQ is not punching up to higher highs. Apple is. Now, I know Apple had a tricky Monday because of the news of the reduction of the Vision Pro goggles. But gang, any kind of Apple, we're going to make less of this item story. We get this about every 2 iPhone releases. This is not an uncommon thing from Apple. The pullbacks are almost always viable. It was an inside candle ultimately. So this is an outperformer. Now it's not punching up to higher highs. Apple is. So what I'll do is we'll follow that index sector stock approach from the mastery. And then, I'll build a position in Apple. Right, exactly. We do that quite a bit. We do that quite a bit. All right, gang. And just like that, that is a wrap. I hope that the look into currencies was helpful. The index sector stock helpful. And I'll see many of you in This Week in the Markets. That'll be published tomorrow morning. We're going to get into how I trade earnings season. Now is the time to talk about earnings. We'll get into that in tomorrow's Charts and Coffee. Now is the time to start looking at, I alluded to two different economic calendars that I like to use. I like to use let's see here. Obviously this one, the Forex Factory. I like Trading Economics calendar as well. And then I also will use, where is it? My Estimize calendar. There we go, Estimize. Estimize is where once I've logged in, I've got all the different stocks that I'm tracking and looking 4 to 6 weeks ahead on. That is what I've got here. So if you don't already have a free account at Estimize, go sign up. It's going to absolutely help you. Even if you don't trade earnings, this is my absolute favorite calendar for earnings. They have the best whisper numbers, and we'll talk more about this in the coming weeks. All right, gang, have a great one. Enjoy the rest of your day. Be good to each other. Thanks for joining me for our 4th of July Charts and Coffee session. Be good to each other.